Hello everybody, this is Lara with your end of the week video for US oil for the trading week ending Friday 4th of June 2021. The main Elliott Wave account now expects more upward movement to continue to the next target at 87.90. I still have an alternate that does allow for a deep pullback here to 54.86 to 54.42 before the upward trend resumes. The larger trend for oil remains up. My analysis for a long time has still expected that there was a major sustainable low in April 2020, which so far has not been breached, and price just continues on up. At the monthly chart level, my analysis for oil sees this huge bear market subdividing as an Elliott Wave corrective structure. If that's the case, then the larger trend at the quarterly chart level for oil should be up, and this analysis is very bullish. The basic Elliott Wave pattern is a 5-step pattern, and here's an example in a bearish direction: 1, 2, 3, 4, 5. The basic rules of this 5-step pattern: wave 2 can't move beyond the start of 1, 3 has to move beyond the end of 1, and 3 can't be the shortest out of 1, 3, and 5. 4 may not move into wave 1 price territory, and then 5 usually moves beyond the end of 3. Reverse direction, and that's what I'm expecting is happening at the quarterly chart level, with 1, 2, 3, 4, 5 to unfold. So 3 has to move beyond the end of 1, and then 3 can't be the shortest out of 1, 3, and 5, and it's usually longer than 1. And then when it arrives, 4 can't move into wave 1 price territory. So I don't have a target for 3, but it's substantially beyond the end of 1, because it has to allow room for a subsequent 4th wave, a huge supercycle degree 4th wave, to unfold and remain above 1st wave price territory. But this wave count is also very long term. This wave is at supercycle degree, which should last decades to a generation. And so, within it, each cycle degree wave should last about 1 to 7 years. So far, cycle wave 1 looks incomplete, and when it's over, cycle wave 2 should unfold and should technically be a bear market for oil. It may last 1 to 7 years, and it can't move beyond the start of 1 below 10.24. 1 is unfolding as that simple 5-wave structure. 1, 2, 3, 4, 5. And again, it has to meet all those rules. 1, 2 hasn't moved beyond the start of 1. 3 has moved beyond the end of 1. When it arrives, 4 can't move into 1 price territory. Let's take a look at how this is unfolding at the weekly chart level from this low down here, this point down here. 1, 2, 3, 4, 5. 3 may only subdivide as an impulse. That's another rule for that 5-step pattern. 1, 2, 3, 4, 5. Elliott Wave is fractal. This degree is intermediate degree. It's 1 degree lower than primary. At 87.90, primary 3 would reach 1.618, the length of primary wave 1. Within primary 3, it looks like intermediate 2 is over here and intermediate 3 is continuing higher. Let's take a look at this at the daily chart level. I have 2 daily charts. My first daily chart will follow the idea that intermediate 2 is now over back down here at this low, and this is an early stage of intermediate 3. My second idea will consider intermediate 2 continuing further sideways. It would now be grossly disproportionate to primary 2 1 degree higher. That reduces the probability of the second wave count. Let's look at the first from this low down here, or this high and this low. This high and this low. It looks at this downward movement as a 3-wave structure and the start of intermediate 3 with a leading diagonal for minor 1. A quick shallow zigzag for minor 2, and now minor 3 beginning with minute 1, 2, 3, 4, 5. Within 3, no second wave correction may move beyond its start below 61.56. Alternatively, if we move the degree of labelling within this zigzag down 1 degree, it could be just wave A of a flat correction for intermediate 2. But like I said on the weekly chart, if we consider this wave count, intermediate 2 when it's finally over is going to be much, much longer in duration than primary wave 2, 1 degree higher, when it should be about the same or less for the wave count to have the right look. That reduces the probability. This is now an alternate wave count. But let's consider multiple possibilities. It's important to have alternates if you can. So A, B, C, B of an expanded flat is now within the common length of from 1 to 1.38 times the length of A. So it's still within the common range. It's still an entirely reasonable wave count in terms of Elliott wave structure. The target for C is slightly recalculated, 54.86 to 54.42. At 54.86, intermediate 2 would reach down to the 0.382 Fibonacci ratio of intermediate 1, and at 54.42, minor C would reach 1.618, the length of minor A. Intermediate 2 may not move beyond the start of intermediate 1, below 33.65. Alternatively, at the weekly chart level, we could see primary 1 and 2 over here, and primary 3 and 4 continuing. If this is a primary degree correction, then it would have possibly a slightly better look than trying to see it as 1 degree lower than this correction. Even though primary 4 would be more time consuming than primary 2, that's okay. Primary 4 may not move into primary 1 price territory below 43.77. I will also keep an eye on this possible alternate for you, but it also has a lower probability now. At the weekly chart level, we've got a good strong upward candlestick making new highs, but it comes with a lack of volume. For oil, that's not actually such a great concern, because looking back at this price history, we see that here and here, we see it here again, we see it here again. So just because we've got a couple of weeks of lighter volume for green weekly candlesticks, for the short term, doesn't mean we can't get continued upward movement, because it's happened before, it could happen again. ADX is indicating an upward trend, and because it's above both DX lines at this time frame, that trend is still extreme, but this market can sustain a very extreme trend for a long period of time. On balance, volume is breaking above resistance, giving us a bullish signal to support the main Elliott wave count. RSI is overbought, but that can move deeply overbought and remain there for a while before it exhibits that short-term divergence between swing highs, and then I would say it's calling for a deeper pullback. Just because it's moving into overbought doesn't mean upward movement can't continue. And stochastics moving into overbought. At the daily chart level, there's a bullish long lower wick on Friday's candlestick. For the short term, a decline in volume may not be much of a concern. We've seen that before, yet price can continue higher. We did see one good strong upward day here, a good push from volume here, so that's good to see. Support at 68. ADX is increasing, giving us a strong bullish signal. It's come up from a relatively low level below both DX lines. It's now rising, telling us that there is an upward trend at the daily chart level. ATR declining as price moves higher, indicating a bit of weakness, but early on in a trend for a bullish trend for oil, I've seen this before, that could turn around. On balance, volume has a new weak range, no signal at the daily chart level this week. RSI in neutral territory for this new trend, plenty of room for it to go. Stochastics overbought, but we don't consider that a particularly bearish signal when ADX is telling us there's a new trend and RSI isn't overbought. And MACD full bore bullish. That's all from me this week with your oil analysis. I hope all our members are having a most awesome weekend.